Hey folks, Dan Frio here with your real estate update for December 13th, 2023. We're just 12 days away from Christmas. Hope you guys are ready. So if you're new to this channel, my name is Dan Frio. I'm a mortgage advisor licensed in all 50 states, as well as Puerto Rico. My main goal is to explain to you guys real estate. Especially we take a concentration on mortgages and the financing part of the equation, because that's what I do. I'm not here to talk you into or out of buying a house. That's your decision. If you decide, hey, maybe I want to buy my first house or maybe my first investment property, I'd love to help and educate you guys on this. But what we do on a daily basis is we monitor rates, we go over programs and everything else. And my goal here is to make sure you're educated on, where mortgage rates are, how you can maybe find the best rate out in the country and so forth. But the whys behind what's happening is happening. So without further ado, let's get to it. Here's mortgage rates. These are the top 6 products people use when they're buying their first house. These rates are issued by Mortgage News Daily. They're not my rates. They're not any individual bank's rates. These are a national average. Okay, what they calculate on this is they're having a person buying their first house, basically a first-time home buyer with a 740 credit score, putting down 20%. Okay, that's where the rates would be. If that's not you, I'll give you my information at the end of this video so you can reach out to us to see if you qualify and what interest rate you would qualify for. So without further ado, what we're going to talk about today is what we expect from the Federal Reserve's meeting today. Because the Federal Reserve's meeting this week, they're coming out today at 2 o'clock Eastern time, and they're going to tell us exactly what they're going to do with the interest rate that they control. Okay, so what we want to do is go over here and say, what is expected of the Fed today? Okay, so basically right through here, what's likely to occur when the Fed session wraps up on Wednesday is a policy turning away from aggressive rate hikes toward what's next? And that's what we're going to talk about right now. So if you're watching this and you're watching mortgage rates and you might be saying, okay, should I postpone buying a house maybe till spring or next summer because rates are going to come down? Yeah, it's up to you guys, but you might want to be cautious because as rates are coming down, more and more people are jumping into the market to buy houses because there's still a huge demand to buy homes. Okay, so what we want to talk about on this channel right now is what the Federal Reserve, what do we expect from them? So here's a system that we use, or I use, to kind of figure out what the Federal Reserve's plans are for the future. Okay, so what we do is we go over to this. This thing is what's called the dot plot. Let me go up through here. What is the Federal Reserve's dot plot? So basically it is when the Federal Reserve meets, they do this 4 times a year. They go in and each Fed member kind of puts a dot on where they expect interest rates to be. Okay, so you're going to find this intriguing because all these dots you're going to see right through here. So let's go through here. In 2023, right through here, all these dots are dots from each member that sits on the Federal Reserve. Okay, you can even see here, they don't have a consensus vote. In 2023, they expected the rate that they control, which is the federal funds rate, to be where? About 5.5 to 5.75. Okay, currently it's at 5.5. So many people said, well, December's the last meeting of the year. The Federal Reserve's telling us they want to be at 5.75, so most likely they're going to increase rates. I can tell you right now, they're not going to increase rates at this next meeting today. They're not going to do anything. As data comes in, now here's what basically creates the conundrum. Here's all these dots are what they expect in 2024. So again, guys, these are members of the Fed. They don't even agree to where rates should be. You can see through here, they range from 4.25 all the way up to all the way up to 6.25. Okay, so if you were to ask this member, they're like, okay, all the economic data is coming in good, inflation's cooling, so we're probably going to start cutting rates. Then if you ask this member up here, who's saying that the rate will be at 6.25, they're going to say, well, rates or inflation's way too high still. We're going to have to increase rates. So even if you ask the Fed, they don't really know. Each member has a different opinion. I have a different opinion than a lot of people out on YouTube. But what I try to do is provide you this information. So we're expecting rates to come down. How much in 2024? Don't know. My expectations are they're going to come down about 1 full percent. Okay, so let's get over to the economic data that the Federal Reserve's monitoring so I can give you kind of at least an idea of what things are coming on the inflation front. So what we want to do is go over here. This is a lot of inflation data that came in this week. So it gives us the inflation levels at the consumer level, and it gives you inflation at the producer level. We had the consumer inflation numbers come in yesterday. They were kind of right in line. The market was basically flat. So here's where those numbers were. Now this is consumer inflation, how much prices are going up for me and you. Okay, so they basically they're right through here. Here's what the last readings were. Here's what the expectations from the economists were, and here's where they come in. So if you look at these numbers, they're kind of right in line, or there might be 1/100th off. Okay, so now today's big number is the producer prices. Now here's why this is a big deal. Producer prices, this is the PPI. How much producer prices are going up? How much on the producer side, how much is their raw materials going up in prices? 0. Okay, last reading was minus 0.4. They expected it to increase to 0.1. It actually came in completely flat. So look at it this way. If producers or manufacturers aren't having to pay more to produce that widget or that product, then they most likely won't have to increase the prices to us on the consumer side. So we're starting to see all these inflation numbers just flatlining. That's what the Federal Reserve wants. Okay, so that was good news. If we want to take a little bit deeper dive into this, let's go over to here. Here's the numbers that I watch. So this is MBS Live. This is a system I subscribe to. You guys don't have to. It's kind of expensive. Just watch my channel every day. I'll explain all this stuff to you, weed out all the smoke and mirrors, and I'll just give you the context. So if you go through here, here's what the numbers are that we're looking at. Producer prices. The last reading came in at actually negative 0.5. It was revised to negative 0.4. They were expecting it to go up 0.1. It came in completely flat. Now, you have core producer price index. What that does is it pulls out the energy cost of this. That was also flat, and the economists thought it was going to go up 0.2, so that's good news. And then on here, core prices year over year. How much prices were last year compared to where they are right now? Well, they expected that to go up. Well, the last reading was 2.4. They expected it to just ease a little bit to 2.2. It actually came in at 2%. Fantastic news when it starts to come to an inflation front. Okay, so let's shrink this a little bit. Based on this information, what's going to go on with mortgage rates? Well, I'm not Nostradamus. What I do is I'll give you the trick. Follow the MBS market. What the MBS market is basically a mortgage bond that trades on Wall Street. You might even have it as an investment in your maybe an ETF or mutual fund. We follow this. We don't follow the 10-year Treasury. A lot of people used to follow the 10-year Treasury because basically what you could do is take the 10-year Treasury right up through there, okay, green screen, right up there, add about 1.5% to that. That's what mortgage rates would usually be. That is off the charts right now because the bond market is in disarray right now. So to follow this meticulously, follow the MBS market. So because this bond right here, the yield on this bond is the biggest component of your mortgage rate. Okay, so let me explain these numbers just in its simplest terms. This is what's happening. This is the price of that bond. This is what's happening. If you squint, because I have a green screen, it says it's up 14 ticks. All you need to know is this. If the price of the bond, any bond, corporate bonds, treasury bonds, if they go up, the price goes up, the yields, the interest rates go down. So today we have an up 14, so we're probably going to get a tick of maybe 0.03 down in rates. So if we go over where mortgage rates are right now, take 0.3 off of that, we're probably going to be at 7.06, 7.05 by the end of the day. A far cry from where we were just 4, 5, 6 weeks ago at 8.03%. So a huge drop, 1 full percentage drop in interest rates on the mortgage front in just 45 to 60 days. That's really uncharacteristic of the market. So that's what's going on right there on that. So the only other data that's coming out today is the news from the Fed, what they're going to do. I'll come out with a special video later this afternoon to tell you exactly what they did, how the markets react. And then don't forget, Kyle Seagraves of Win the House You Love and myself, we do a live event every Wednesday at 6:30 Eastern time. I'm sorry about that, 6:30 Central time. That's 7:30 Eastern time. Today's venue is going to be, and we're going to do it once again because we started this last week and we had a slew of people on the waiting list or on the chat wanting to know, how much can I really afford? So if that's you, then one of the biggest questions that first-time homebuyers have is, how much can I afford? So if that's you, please join us tonight on our live event. You can even subscribe down below on my subscription button if you haven't yet, and you'll get an alert letting you know what time it starts and how to access that. So other than that, I'll be back later this afternoon to let you know what the Fed did and the reactions to the market. So that's it for today. God bless, guys. Hope to see you later this afternoon. Have a fantastic day.